Well, hello, folks. Welcome back. So I'm a little tardy today. I had a lot of curveballs thrown at me in January of 2025, and the Saturday morning was no exception. Let's just put it that way. So I'm just thankful I was able to get everything finished and taken care of. And now it's kind of late here in my local time, so I'm going to try to make this one brief. But I'm also going to introduce the structures. That way, every Saturday you'll have some type of a review and a little bit of encouragement and talking session. I'll leave the talking session that's not part related towards the end of the Shotgun Saturday. So we're going to take a look at what transpired on Friday. So we're looking at a daily chart here on the NASDAQ 100 March delivery contract for 2025. And I want to take your attention to this candlestick right here. Okay. That is the previous week's Friday daily candle. High of that candle comes in at 22,078.25. And the low of that candle comes in at 21,844. Now, since it's a solid down close candle, we're going to measure that range and get an equilibrium price point, which is half of the range between the candle's high and the low. 21,961.25. As you'll see, this level here, we're focusing primarily just on that. So the high and the low of that candle is not all that important to me now. Now we have a gap in here. And I'm going back to the body's close. And the reason why is because there's a volume imbalance here that overlaps with this candlestick's open and high. So they're all the same price essentially here. And then this candlestick's close and it had a wick down into the low of this. So even though this is a true separation between the candlesticks of previous Friday and then this present week's Monday's opening, that is a real gap, but I'm highlighting it back to that body here. So it's kind of like a hybrid of a volume imbalance and an actual gap. So that midpoint here is actually just the same thing as the low of that previous Friday's candlestick. So that's not the exact price, but we're just blending those two ideas because it makes it very simple. The sell side down here, I'm interested in seeing if it has a willingness to get down here. What changes that ahead of the new week? Because obviously it's Saturday night here in the west coast of the United States. So I'm going to go out on a limb here and say as long as we don't trade above this midpoint here or previous Friday's low, as long as we don't trade above that, my bias is going to be next week going into here. Now, if you look over here, we have this low, we have this low, and we have a slightly higher low. So that's why I'm defining it based on this, because as the rules I taught you in the YouTube channel, this is a high probability candidate for a sell side liquidity pool. So it can meet the criteria as a draw on liquidity. I like the fact that we opened here, ran up into the inefficiency I mentioned, and then gave up the ghost and came back down in. You're also encouraged to look at the weekly range. I'm not going to show that here. It's something for your homework. When I give you homework, it's not necessarily me giving you something that I want to come back and revisit. It's me prompting you to look at things and collect information and data. And over time, by you doing things like this, it will naturally reveal what it is that's being shown. By repetition, you'll see the patterns forming. But I want you to look at the highest high and the lowest low of this week's trading for NASDAQ. And simply go to a weekly chart and drop a Fibonacci from the low and drag it up to the high of the week. And what you'll see is, even though we have a very wicky weekly candlestick on the low, it still did a TGIF, which is it trades back to 20 to 30% of the weekly range after having some exhaustive price move to the upside. So while the weekly candlestick is a bearish close with a very, very extreme low of the wick, like a doji type thing, that still delivered on the 20 to 30% of the weekly range, which is my TGIF. Thank God it's Friday trade idea, where the market tends to move back in retracement from Thursday's 1 p.m. to Friday's close. In that portion of the weekly range, you'll usually get a 20 to 30% of the weekly range retracement. And as a reminder for those that just heard that for the first time, I have an actual lesson right on the YouTube channel. Just search TGIF on the YouTube channel and you'll find the one video that teaches about it. So there's lots of liquidity resting below these lows in here. It doesn't mean that it's going to go down there without, any risk. It's certainly going to be risky because we're assuming that where we open on Sunday, which I never know that opening price. No one knows the opening price on Sunday. So you have to submit yourself to that and allow whatever the market's going to do on Sunday to set the stage for how the market might deliver. So I'm opening up with a new week on Sunday with a very soft bias that I want to see it break down and trade in these areas here. If it were to trade again above the midpoint or previous week's Friday's low, then it's the buy side. That's probably going to get hit. So it's something of a challenging week this week. It was, as an educator, as a mentor type role model, I know that what you watched me do in the Telegram channel and then what you watched me call for Thursday's trading at 10:10 Thursday morning and then watched it deliver like gangbusters. But that causes obviously mixed feelings. For those of you that like see me do those high order executions and such, it's inspiring and it's encouraging and it's entertaining. But for those that simply want me to teach everything that I know, it frustrates you. So just know that between that, or let's say it this way, with that excluded, the week would have been challenging for a ICT student that had just recently started. So if you felt that difficulty, then that's normal. It's okay. That's exactly how you should have felt because it was a very challenging week. Not impossible, obviously, but certainly much more challenging than other weeks. There was a lot of volatility in it, and it forced the idea of trading inside the range. And that's kind of like the premise of this Shotgun Saturday. Dropping down into an hourly chart. Okay, here is that midpoint level that we've shown on the daily chart of equilibrium of the previous Friday's down close candle daily range. You see how we slammed up into it here, and then we broke down in the afternoon. Over here, that's that separation from previous Friday's close to this present week that we're in, where we open up on Monday and started trading there. So that is your gap, okay, or new week opening gap. Zooming in here on a 15-minute time frame, you can see how we consolidated here, rallied up, and then hit that middle of the weekly extreme that we formed a high on at the previous Friday's midpoint or equilibrium. So that equilibrium caused the market to turn sharply and break down and trade lower. Now there's a very obvious sell side liquidity pool resting right here. So I would not be surprised if we don't gap lower on Sunday. So where we settled here on Friday, we could open up significantly lower, okay, and then attack that there. Last up close candle in here is your bearish order block. Now, I'm going to toss this in here, no extra charge. See all these wicks here? We have a wick high stops at the gap. That's the separation between previous week's Friday's closing price and then present week's Monday's opening price. So that's what's being highlighted here. But it hits the high of that and then trades through it, creates a wick, comes right back down, closes on the high of that gap. We open, rally up, create a little bit of a wick, and close here. And we open here, then hit that equilibrium price point of previous Friday's down close candle. Now, I already know some of you, okay? And the list is getting smaller, by the way. So I think I've got some individuals' attention this year so far. And that's good because I'm trying to do this in a manner where all I'm doing is focusing on the content and focusing on the setups and focusing on showcasing what it is I'm doing with the information that I already taught. But when the price hit that bearish order block there, I knew that it was likely to trade to at least this point here and 21,750. I can say that because I executed on it. But before I did that, I was talking to another YouTuber, and let me just toss this in here because this is a Shotgun Saturday, so I can afford the deviations from topic. And if that bothers you, I promise that if you listen, it's helpful. But in the past, I've reached out to other YouTubers and other educators and whatnot, and unfortunately, my ICT persona was very divisive, and a lot of them that did not find any affinity in that persona weren't willing to have a civil conversation, or they just wanted to go into all kinds of gotcha type thing. Okay. um, I share a trade idea or I share analysis and then execution, and the person might look at it and say, well, did you add those after the fact? And when that happens, that's extremely offensive, especially when I'm trying to just simply be civil with another person in the community as an educator, or they're out there trying to be a social media influencer or some kind of public figure. As soon as that type of stuff comes up, and these are private conversations, then I end it. I have no interest in having any in dialogue with someone like that. So it shows an insecurity too, and it's unfortunate because when I wasn't wearing the mask of ICT and I'm trying to talk to other people, they can't get past it. They stumble over that. So I'm trying my best this year to just be who I really am. And one of the other YouTubers that I like openly, I told you all in the past, is Matt Miller. You know him on YouTube as Trades by Matt. So I was pestering him. I don't do it all the time, but I sent him a text because we obviously have both shared our phone numbers with one another. But just drop into this gap here and I'll show you some more information, but I'll come back to Matt in a moment. Separations in here are gradients of that gap between Monday's opening price and Friday's closing price. So this is the high of it. This is the upper quadrant. Midpoint or consequent encroachment. And here is the lower quadrant and the low. Okay. And when it was up here at the bearish order block, to teach a very easy, low-hanging fruit objective and trading inside the range, not requiring it to go very far, but still be able to find a high probability setup to reach for. When you have this level like this, where it's a gap and it's likely to trade lower, why? Why would it be high probability for it to trade lower? Well, the fact that we're on Friday, and I like to always look for 20 to 30% retracement, and we've basically filled in that gap between Friday previous week to present week's Monday's opening price. So we had that, we went outside of a little bit, and we traded up into the equilibrium of the previous Friday's daily candlestick. And then it breaks down, and then we have the last up close candle in here. I like this as the last up close candle being defined as the bearish order block. You thought I was going to cover that, didn't you? All these wicks in here shared a lot of the same range. And that last up close candle, it is the change in the state of delivery, that opening price right there. Okay. So there are people out there that are falsely claiming that I'm borrowing logic from someone that just recently learned how to read price action through my content. And without stirring the pot even more than others like to do, I'm just going to count you to go back and listen to what I'm outlining live in Telegram, and then what I outlined on Thursday. Okay, because that's going to basically separate the individuals that want to have a identity given to them without merit, and me. Okay, so I'm just going to say it like that, so that way it's not meant to be egotistical. It's not meant to say I'm better than. I'm just simply saying that I'm not borrowing anybody else's logic. Okay, but the reason why I brought Matt up, and I'm name dropping because I'm not doing mentorship anymore. I cut all of the teachings off with my private mentorship group. Admittedly, he and I talked prior to that, but I asked him not to say anything. And that was just because that's my personal time. And I didn't want anybody's feelings to get hurt. But now, because I'm not operating the mentorship at all, I'm free to disclose whatever I want to do. I can do it. And now I could have done it all times before, but I'm just stating the facts because I shared this with someone that's in the trading community. Not that I even need this, but um, if I like someone, I have the right to be able to talk to them any way I want. And meaning by saying that is that if I'm trying to share an opinion, he didn't ask me for it, by the way. I just shoot him a text once in a while. And I just so happen to say, okay, well, it's afternoon. I'm just going to toss him an idea to just watch. Okay, so I'm not claiming he's my student. I'm not trying to do anything to make drama. I'm just stating the facts that what I'm about to show you was explained in a text message to someone else. Because there's so many of you that like to believe that these are all hindsight cherry picked and demo, and they're just ate up with hatefulness. And I understand, I get it, but just know that I have receipts, so just relax. So if we drop down into a 5-minute chart, you can see how price slams up into that last up close candle on the 15-minute time frame. So I already know some of you are looking at this and saying, well, how do you know when to look at this candlestick and what's this time frame's importance right now? That is the price delivery continuum, meaning that you go from a top-down approach to a lower time frame, and you're constantly cycling through. You're always looking for points of reference that's going to meet the expectations that your trade idea or your bias or draw on liquidity is going to introduce the idea to. And here I'm interested in going short. So when price was hanging around in here, I said to myself, it's likely to go lower. And because you watch me do something that's extraordinary, and I don't mean that to be bragging, I'm not bragging, but I think anyone that watched what I was doing on Thursday in the Telegram channel, and then the comment and analysis idea that I suggested for the afternoon that day at 10:10, that means 10 o'clock in the morning, 10 minutes after 10 Eastern time, I closed in the Telegram channel with what I was going to anticipate seeing in the afternoon. And then it delivered. And then obviously I executed on it. And I dare you to say that was a demo. I dare you to do it. So when it was trading up into that bearish order block, I wanted to go short there. And then that little retracement back up in, I added to it. And I'll show you in a moment. Just give me a minute. But I wanted to teach something that was more in line with what I want to showcase this year. Because I had someone comment on something I said in my private mentorship before I closed it down. Years ago, I saw a lot of people, and I still get it till to this day. If I share a trade execution, invariably I'll have a dozen people say, I took the same trade. I know you didn't take the same trade. There's no way you took the same trade that I did on Thursday. There's absolutely no way you did that. And I know this is true because you don't know what I used to get into those ideas. You can see it in hindsight, but you don't know what I did. One of the things that I used as a litmus test for people that like to pretend they had already known all the things that I've been revealing to the community over the years about algorithmic price delivery, they they have obviously adopted what I have taught. They use my vocabulary, my vernacular, everything. You can tell who's traded or learned from me. Okay. And there's this new wave that folks are trying to create, some kind of a side quest, some kind of a, different storyline that makes them sound like they're, unique, but they're really just borrowing my logic. And there's nothing wrong with borrowing my logic. That's why I taught it. I want to see you use it. One of the biggest turnoffs is these guys that go out there and say that they have known about it or they've been using it for so long, or I'm using their stuff, which is obviously stupid, you know. But I have always said that if you understand the algorithm, then you'll know what an IMP24 is. And obviously, no one was able to come forward with it. But people that have studied my stuff, they end up creating their little mentorships and such. And they would lie and say that an IMP24 is something in the chart. They would say, oh, it's a small little dealing range and there's IMP24s everywhere. That's wrong. That's a lie. That's an absolute lie. An IMP24 is the daily range narrative. What is going to make that daily range do what it's going to do from open to close? When there's a lot of manipulation, I don't know what it's going to do until I get the information. And I had that at 10:10 on Thursday. And I shared it with you. I said, this is what I'm looking for. I'm looking for that afternoon to trade up and trade into the levels I gave you. And then you watched me execute on it. I did that trade and I basically demolished it. Like I simply demolished it. And I'm telling you this because there are a lot of people that are going to lie to you a lot now because I'm not doing anything even with my private mentorship group. And some of them are very upset with that. But I'm not going to provide content to people that are without class, that are constantly selling it, trying to offer it to other people that can't be a part of it. And frankly, I'm burnt out with all the complaining that they think they own me. And I don't like that. Not everybody, but there's a few of them in there. And I'm at my wit's end with people that are entitled. I love teaching. I absolutely love doing it. It's in me to do it. And because I love it and I feel that I have something that's unique, no one else is qualified to teach what I'm doing. So I have a lot of students that are now teaching because they learned a model that they like and they've made lots of money. Some of them millions of dollars. And now they're doing their own little thing. I'm not standing in their way, but I can't be in any way of attachment because if they do something that gets them in trouble, I'm isolated from that. So that's why I don't co-sign. When you start teaching, because you've learned from me and you start running mentorships and you start charging people money, I cut you off. I don't have any interaction with you anymore. The reason why is because now you've entered a realm that if you do something that's causing someone harm, I'm not liable for anything that you're doing simply because you learn my content and learn from me. That doesn't associate me with whatever you've done to other people. So I've had lots of students do that, and they don't understand why I don't communicate with them anymore. It's not I'm not trying to be rude. I'm not trying to be mean. It's just I'm not trying to be associated with another business entity that is a spinoff of my own work. And there's a lot of people out there that abuse what it is I've taught. But what you saw me do on Thursday, it was me using the IMP24. I know what that algorithm was going to do. And you can argue and you can say whatever you want to say and make videos and whatnot, but you watch me do it live. I called it out, and the very PD arrays were used in the afternoon session. Now, is that very, very good luck? Or is that something that I told you I have in my repertoire that I'm never going to teach you? Now you're thinking, and I got a lot of comments about this, why even bring it up if you're not going to teach it? You're holding back. Yes, because that's my enigma. You watched me use it there with manual entries. There's automated Enigma, which you would never lay your hands on or eyes on. And me using the logic that my algorithm would fire off on, that's what I was doing. I was executing on that. And that literally smoked everything out there. You see me doing over and over and over again stop loss placement just to mock price action. I'm daring it. And I know as long as there's manual intervention that's kept at bay, it means they're not, in there moving things around in extremes. I understand what the algorithm's going to do. And you'll never find another person being able to do that. And again, I'm saying that factually. I'm saying that with a great deal of consideration to the ears that are listening to me, because you all know me as Inner Circle Trader. And I made my image around being braggadocious and in your face. I'm not trying to do that here. I'm just saying, look at what I've done. Just look at what I've called for in advance, 1 minute candlesticks at a time. And then I told you exactly what was going to be used for the afternoon session. Nobody else was doing that. No one was able to do that. And you'll never be able to see anyone else do it. So when you see these guys out there saying they know what an IMP24 is, if they don't know how to call the daily range formation, that means that's the actual daily range, how it's formed, okay? That is not borrowed logic. The people that sit on social media and say those types of things, they wish they understood this. They're the ones that are in there making sock puppet accounts, begging me to teach it. And I'm never going to teach that. It's too good, okay? It's too good. So I had to share that because I had very sincere requests for it, because that part of that, I guess, information I was given to one of my user groups in my mentorship. I have lots of leakers in one particular group, and I've whittled them down into a couple thousand members. And I just lost interest in it. It's easier for me to say I'm not going to do it anymore and put it all out here for free. And all of those videos are going to be up on my YouTube channel. It's going to take me weeks to do it. I'll add, a month or two, each week of commentaries. But you'll see that I'm literally not interested in doing any kind of charging of money. And if you pay for this information after this, like you're really being foolish, because I'm giving it away. I'm literally giving it away. So when individuals take this information and the things that I revealed as an IMP24, until you saw Thursday, you might have been on the fence about, well, this guy, he talks a lot of stuff and sounds, conspiratorial. It sounds insane. This guy's a lunatic, right? Show me someone else that could do what you watched me do on Thursday. And I gave you what it was going to do at 10 o'clock in the morning. You're not going to find it. I promise you, you will not be able to find another person doing that. Okay. And if they can, they are going to do it right away. And they're not going to be able to do it. So that's what's different about me. Okay. So now to draw the line of why I'm even talking about it. The idea of having that type of control over what you're doing as a trader, knowing with a great deal of foresight, it looks too good to be true. And if I wouldn't have told you what I was going to use in the afternoon beforehand, you probably would have said it was cherry picked, right? I did that so that way the folks that are on the fence about there's an algorithm or there isn't an algorithm, that's a real big pill to swallow now, isn't it? Nobody's talking about that, but they're talking about what I've done in the past and what I've said in the past, but I have receipts for it. Okay. And I never promised I was going to teach my Enigma. Okay. That's my personal algorithm, but that's what you witnessed on Thursday. That was me just pulling back the veil and showing it to you. What I am focusing on in 2025 is simply looking at low-hanging fruit objectives. So what I did was I told Matt Miller, who was Traded by Matt on YouTube, that I felt the market was going to go lower. And ultimately, the new day opening gap for Friday was also a draw. So there's a lot of things that were factors for likely to see the market go lower in the afternoon on Friday. So as the market traded back up into that bearish order block, I knew that the first presented fair value gap here was a likely draw as well. So everything was in a premium. They've done enough to take out all of the, trailed stop losses. Anyone that was short, now they can go in and start working back towards the discount in the range. Okay. And first presented fair value gap, if you extend that over into the afternoon, it becomes an inversion fair value gap there. So it's changing its characteristic from bullish to bearish. So what's an easy low-hanging fruit objective that can be utilized to as a draw on liquidity and also a very easy target, and not even trade back to first presented fair value gap, or trade down into the sell side liquidity over here at 21,750 or the new day opening gap? Well, the easiest low-hanging fruit objective would be half of that gap that was formed from previous week's closing price on Friday and the Monday opening price of this present week. That's this blue shaded box. That's what I was showing you at the beginning of the video. So trading and aiming for this midpoint is a real easy objective. So I was telling Matt in text, but he was busy working on his Arnold Palmer out there on the greens trying to be a golfer. And I'm ribbing you, Matt, because I can't stand golf. I don't understand why people are interested in that. It's terrible for your back. It's not even athletic. And to me, it's extremely boring. But people say that about me too. And I get it. But I told him, I said, I think it's going to go lower, and I'm looking for lower prices. And I went short, and I'll show you the execution here. So there's the entry points, and you see that small little gap right there with the volume imbalance. As price went up into it there, that's where I added again. So I went short 7 contracts, added 3 more contracts for a short of 10, and you can see the executions there. And then as it hit the level here, a couple handles above, just for the sake of the spread. There you go. Okay, so again, this is for the folks that keep asking me, why don't I do these prop accounts? Why don't I get 20 accounts with Apex? Why don't I get 20 accounts with this extra guy's company over here? First of all, I don't know these people. They're not regulated. And I would never give them my personal identification and social security and all those things just to make sure I can get the money out of them. And do the math just on what you saw this week. Okay. I would have made over $1 million just this week. You think they're going to pay that out consistently, or they're going to let me stay around and do that? No, they're not going to do that. So to save myself trouble, I'm not worrying about it. So if I want to make $1 million, I can go out there and make $1 million. I don't need to use paper trading or demo accounts and then hope that these guys honor it and pay out. So no, I'm not interested in that. So whatever you see me doing, all these, like the trade I did on Thursday, that would have been it. In one trade, boom, it's done. I could have added more to it if it was with 20 accounts, and then I would have been the highest paid out prop firm trader, not my student that's trying to pretend he's not, right? So if we look at what we did on a 1 minute chart here, you can see the change in its characteristic over here with the first presented fair value gap, the sell side liquidity. Actually, I told trades on that too also. 21,750 is possible, but I had to run out. I couldn't stay with the chart to do anything, which was the reason why I did that half of that range. But then it hit, and then of course I did my typical, I like to be facetious with him because it's like a running joke and he knows what I'm talking about. But long story short, it trades down into the new day opening gap for Friday, and it even goes lower than that. So I did a lot of the jawboning that I would have done in this section here, but I want to use this moment in the recording because it's getting a little bit longer than I want, and I'm tired, to be honest with you. So you probably hear it in my voice. I'm tired. Reflections and resolve, meaning that you looked at last week. It was a little bit of a challenging week, okay? And I say that not for myself. I'm saying it in retrospect to you as a student, because I'm assuming that you're a new student with my content. You may not have been recently just introduced to it, maybe even using for a long time. But in my opinion, I felt that this past week would have been challenging for a new student using my content. Obviously, in my hands, I can make it work. And for people that have trained with, a respectable amount of time and did the due diligence of back testing, logging, and really digging into finding their own model with it, I believe they could have found something that would have been helpful to them and positive on the outcome. What resolve can we apply going into the next week? Well, I'm looking for lower prices. And if it breaks down lower, I think we have a really wonderful February ahead where we're going to probably see a lot of large ranges, a little bit more trending type moves. And that's exciting. So some of you are asking, where's these 20 videos? You promised, you promised, you promised. I also am a real person. I'm not an artificial intelligence. So that means I have family members. I have personal things I have to take care of. I have businesses that I run. All these things require my personal time. I had my oldest son, his business, it caught fire. And I had to make changes in my schedule. And I had to do a lot of different things because now his finances and his wife, they're all, they're nervous about that. So I'm helping them. My other sons, they moved and I had to help them. I didn't feel good, a couple days this past month. And my father, who just recently got out of prison, has not done what I had hoped he would be doing when he come out here. So I have a lot of things going on my plate, and that has been too much for me to be it's a bigger barrier for me to have gone out and made the amount of content that I intended to. Does it mean I'm not going to? No, it just means it has to be deferred. When I can make time for it, I will. So it's the beginning of the year, folks. Okay. It's kind of like a New Year's resolution. If you start off with the resolutions and you don't hit every goal every day you're trying to do it, as long as you keep moving in the right direction, that's the progress you're looking for. So we make goals, we set, agendas, but real life dictates that. And I unfortunately had a lot laid in my lap this past month, and it prevented me to do the things I wanted to do in terms of productivity for teaching. So that's why you didn't get 20 videos. I'm not saying I'm not going to do them. I'm just saying I don't know how and what time frame it's going to take for me to get them done, but I will be actively doing it. Okay. So I think that if you understand what I'm sharing on the Telegram, why did I pick Telegram, by the way? It's because it's a way for me to hide the usernames from the other people that want to sell and market directly and pretend that they're me, because it's a private channel. You're able to watch me. There's no interactions by other people. I'm not interested in your thumbs up emojis. I'm not interested in thank you so much. I'm not interested in that. I'm focusing on me, and I want to be right to the point. Shotgun Saturdays are going to be not like that, as you can see here. This is a really tame edition of Shotgun Saturday, but I just talk organically there. In the Telegram, there is no ranting. It's just me focusing on price action, telling you what I'm looking at, and there it is. It is not signals. It is not for you to copy me type trading. It's for you to focus and learn how to read the tape. That means watching price delivery, reading real order flow, not the nonsense on level 2, not the nonsense with all these other things out there. You're watching real order flow. You're watching me call every little tiny fluctuation and change, and where the rhythm changes in the delivery of price, all those things. You're watching that real time. There's nothing like it. It's absolutely the top tier in analysis because it's the best. It is the absolute best. And I welcome anybody to put what they're doing against what I'm doing in that Telegram channel. You'll never see it. You'll never see them outclass that. And I'm not even doing anything extraordinary really yet, but I want to bring your attention back to what I want to focus on this year, which is looking for very systematic, low-hanging fruit objectives. What's the benefit of having new day opening gaps and new week opening gaps and the opening range gap and having things like the first percentile fair value gap? It removes the ambiguity. It's very specific things. And I'm looking for setups that create runs back to those levels. So they're like magnets that are thrown out there in price action. And when I think that price action has shown a willingness to want to go lower, I'm aiming for the next one in that list of things. And if I find a very easy 1 minute fair value gap that allows me to get short on it, that's what I'm doing. And you're going to see that that is such an easy approach to trading price action using what I taught already on the YouTube channel. I don't need to reinvent anything. I don't have to do any kind of advanced lessons. I'm just simply taking what I've already taught for free on this YouTube channel and putting it into the marketplace and showing you how the setups are being taken by me. The trade managements, the stop loss, obviously, I'm not going to teach you how to play stop losses like that. Okay. Again, that's Enigma. That's my algorithm. That's me understanding how my algorithm handshakes with the market algorithm. And just for the folks out there, I was going to write a fourth book, which was fiction, and it was going to be basically around a fictional, person, loosely based on the character I created for the internet, which is Inner Circle Trader. Obviously, I know how to trade. Obviously, I know how to teach, and obviously, I've made millionaire students with this content. But I was going to write this book in a way to kind of like snub my nose at the people that just simply want to look for something to complain about all the time. And when I thought about doing it, I was like, well, let me create some kind of a buzz around it. And I always would skirt the line. I would blur the line because I would always say, I coded this algorithm. I codified this. I'm specifically talking about my algorithm. IPTA, the interbank price delivery algorithm, that is the master algorithm that all other markets use that same model. That's that same algorithm. Okay. I didn't code that. I never said I coded that, but I have codified and coded my Enigma. My Enigma is meant to handshake with that. I can't take you to a place where here's where Enigma is running on this server or these servers. I can't do that. I am showing you how my interpretation of what I believe that market's going to do based on my understanding and how my personal algorithm, which is Enigma, dovetails with that. And all of these things that you're seeing people write about and lie and say things, it's just a result of them just falling head over heels over the caricature that I created as Inner Circle Trader. So it was a marketing thing to get people talking. I'm a master at that. All you have to do is manipulate the right kind of person, which is the trolls, and they'll sell the idea of anything. And I have them working for free for a long time for me. And then when people listen to them, they want to see, does this really sound like something he would have said? Or is he really doing that? And then they come to the YouTube channel and you come now to the Telegram channel and you watch me where I can go right into it without having a lot of talking. Like I'm doing a lot of talking in this video because it's meant to be a lot of talking. That's the shotgun aspect of it. The idea is that you jumped in the passenger seat of my Corvette and we're going for a ride. We're just hanging out and talking. That's the premise of Shotgun Saturday. So it's a boring drive if you're sitting there and not talking with one another, right? So when I am teaching, I want you to understand the specifics. But when I'm focusing on showing you, I don't want to talk too much because I want your focus to be where my focus is. I'm not going to try to have a conversation with you when I'm in here trying to make money. So if I'm trying to make money, there isn't going to be a lot of dialogue because I'm focusing on price. So I've always been able to do this with very little words. But I did it because it was all part of the marketing aspect of Inner Circle Trader ICT. Just like Deadpool is the merc with the mouth, well, ICT is the mentor with the mouth. He's talkative. He's very, very talkative. I'm not very talkative. In the real world, I'm very introverted. So it's all a lot of pantomiming to get the audience members engaged enough to be held to the task of listening to me. I'm making this as interesting as I possibly can because really trading in itself is boring. It's very, very boring. You're watching price go up and down and you're trying to figure out what you're going to do next. And you're worrying about how much you're going to lose. That's the reality of it. So to make it engaging, and predominantly my male audience is who I'm targeting, I use things that are action-packed, controversial, conspiracy, all those things, creating a mysticism around it. And that's the showmanship, the performer in me. It's you getting lured in with that. Most of my students came to me with just morbid curiosity. They're like, who is this guy? He's crazy. He's bipolar. I'm not bipolar. These are all things that I did to get people talking about me. And I never had to pay for advertising, not one time ever. And look at the channel, look at the number of people that listen to me and how many people use my content. So it's in the beginning, like I said on Baby Pips, I was doing a social media experiment. I wanted to see what I could cultivate from this. Could I create the same thing that happened in my own development? And honestly, it's still not there. No, there's never been another person that came like I did. And I tried very hard to create that test tube scenario for it to happen. It didn't happen. So, in closing, I will be doing more lectures and teachings about the very specific parts of what I'm using for my model. What you watch me do on Thursday, that is not going to be taught to you. Absolutely not. And and the reason why is obviously it's too strong. And I would never give away my whole life's works masterpiece to anyone. And it's not written down in anything. There's no book where, it's written out where someone could literally take something from me and know how to do it. You'll never have that. Okay. So I think that's going to be it for this one. I've done enough talking for tonight. I just want to encourage you that we're not trying to do everything. We're just trying to find very simple setups, price runs from one logical level to the next based on liquidity and inefficiencies. And I think that by the end of the year, you'll have a better understanding about how you might want to go into doing this on your own. So until I talk to you next time, enjoy your weekend and be safe.